What a genius. What a gullible. What a nincompoop. All right. Well, hey, good morning, everybody. It's just after 7:30 in the morning, a couple hours before the New York Open. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com, an ECN that allows you to trade Forex, energies, metals, indices, and binary options. Hoo-ha! So what I figure we'll do today is do some technical analysis. What do you stink? Smell like a plan? Why don't I go through the disclaimer and you type in to the chat room what currency pairs you would like me to start with. Okay? Let's get this party started. Let me remind you that trading and investing are risky, not appropriate for everyone. Your past performance, good or bad, is not indicative of future results. So stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. All right, we got Aussie dollar, pound dollar, kitty cat yen. What else is on your mind? How can Wayne help? Aussie USA. All right, well, thank you, Mark. Thank you, Marina and Tim and Oren and Jen and Bob and Sebastian. Some dollar yen, huh? All right. Well, then, yeah, let's, what do I got here? Euro dollar. We're stuck at the weekly reversal pivots. I owned stochastic kicker trying to head up. 5-8 cross heading up. So price action, let's say if you're using moving averages, let's do it that way, might say sort of up into these two moving averages and then down again. The oscillator says it could possibly go higher, but remember, oscillators are not necessarily that important in a downtrend. Now, the fact it's going up does suggest more risk when you're trading south because it's kind of like a headwind. You know, you want it to go down, the oscillator wants it to go up. But let's say it should go, I don't know, at least 50%. You know what I'm talking about? One little trick is if you hit the reversal pivot profit area early in the week, and that was a Tuesday, very often by the end of the week, you'll touch the weekly central. So that I have in mind, and this wants to go up. And then just about that region, you could call this area here an important sell zone. And sort of a trend line I got going down. So, you know, boy, oh boy, how about up into the moving averages? If you use moving averages, you must respect them, so it should come down at least a little. And then how about up into that zone, and then possibly down. That's kind of what I'm thinking at first. That's what it kind of suggests. Do you concur, Doctor? Hey, Law, haven't seen you in a while. Is that too complicated, Oren? It's just trying to catch a couple of different time frames going on. So, you know, a 4-hour Stokes cycle can take several days, right? So up for a little while on the 4-hour could be up to, let's say, up 2 days, down a day, up 2 days, and then maybe by then we follow the daily Stokes around. Maybe. Maybe it's just one more big old day and then down. Okay, all I'm suggesting on the 4-hour is that if it's heading up, selling is a little riskier than before. That's all. Well, technical analysis wouldn't do that. Olufemi, right? That's technical analysis. It just that's not in there. It's just priced in. Yeah. So tell you what, if new information hits the market, it will be immediately priced in. What direction? I don't know. What's the news going to be? I don't know. That's a whole different discussion. All right, so we'll keep an eye on. Oh, by the way, I want to let you know that as a sponsor of Forex Today, our videos are now posted on the Forex Today website. So you can see here's yesterday's webinar. Isn't that nice? So if I click the theory is, it'll be there. And there's yesterday's video. Yeah. Awesome. Okay. So that's a resource for you. So what is it today? The 24th of June, and there's already 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 posts at least. That's just on the first page of trading ideas for today. Nice. So there's a nice little resource for you. I just want to update you. Okay. So that's kind of what I'm thinking here technically. Like I said today, let's keep it technical. Lots of choppiness in the euro today, just like a rumor and then another rumor, then another rumor. Pretty soon nothing happened and you lost a whole bunch of money. Oh! Shoot. Stuff like that can happen. So we'll continue through the majors here. We'll do pig dog. For which one, Marina? I mean, for what I'm doing? Oh, I don't know. How the heck would I know? All right. So anyways, pound dollar. Boop, 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 boop. All right. Pound dollar. It also says up for a while. Now, what I've been saying recently is when the dollar's weak, I like to look at the pound going up. So if that's the case today, that could be a very interesting setup, right? If the 55 is in control, which it is here on the 4-hour, what does that suggest? What does the technical analysis suggest? Sideways? Kinda. Double top at best. Okay? Double top at best. So, you know, the most I would plan on, of course it can go higher because it's going up, but the analysis tells me the best I could expect is that if the dollar bulls take over or the pound bears take over, then it's only going to do, I don't know, a fib, that kind of thing. Where, I don't know, that's a debate, but that's where you'd use a fib. Okay? But the point here is that you recognize that there's been a change in the market. It's still bullish. It's just less bullish than it was. And would you venture to guess that maybe market participants were trading the weekly pivot points? Think that would have come into play? Sure. You know, to make that interesting, pound dollar went up, hit reversal pivots, and stopped. If I go back to euro, they went down to weekly pivots and stopped. What do you think? Weekly pivot points perhaps should be something that you consider using as a tool? Remember, this green zone we had on Monday morning. The red zone we had on Monday morning, and they're predicted top and bottoms of the market. How interesting, huh? How do you identify a pivot point? You could do the calculations. There are calculators all over the web. But you take the high, low, and close of last week's trading zone, low, high, close, add them together, divide by 3, and you get the central. Oh, wait, are these monthly? Oh, I'm sorry. My bad. They're monthly, so if you didn't have them and you're scratching your head going, well, my weekly pivots are different than Wayne's, I apologize. We had this 3 weeks ago identified. I forgot we were on the 4-hour. These are weekly pivot points. Now, has anyone purchased my book? It's not really a plug, but I just want to make a point here. How many people have ventured out and spent, I don't know, $44 or whatever Wiley charges for a book? Remember, it's not my book anymore. I sold it to Wiley. They put it on Amazon and rake in the dough. Okay, and I wrote that, what, 7 years ago? 8 years ago? I don't even remember. All right. The point I'm trying to make is my observation, and remember, I'm 99% self-taught. My observation that if M2 is the bottom, the predicted top is right there, M4. Isn't that interesting? Oh, what is it called? Oh my gosh. What do you mean? You don't, what? How rude. Come on. Mr. Ross. Strategic and tactical Forex trading. Holy smokes. We should probably do a big old fat webinar or something. Okay. But anyways, that's what I wrote 8 years ago, that if this M2 is the bottom, the predicted top is M4. And look what happened. Perfect double bottom on the monthly M2, straight to the monthly M4, stop. Holy smokes. I don't know. I've been doing this a long time, and I find all of it very fascinating. I hope that comes across. How interesting. So what that tells me, and this is why I bring it up, because I'm always trying to keep confident. Right? And I look at that and I say, market participants are definitely using monthly pivot points. And listen to my language. Remember, it's part of neuro-linguistic programming. You're training yourself when you speak. Market participants definitely use monthly pivot points. Therefore, perhaps I should respect monthly pivot points too. So let's just very quickly review. They paid attention to this one and this one, and the monthly central was important. How about this? Up, 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 and where did it stop? In here. which was also a monthly. Okay? Went all the way up here, double topped at the monthly reversal, and came back and played this monthly on the bottom. Holy smokes. So you might scratch your head and say, well, I still don't get it, but I see its importance. Well, then put it on your list of things that you should research. And, and you could obviously ask me, right? But that's what I did when I first started trading. There was no legitimate educational sort of resource. Forex training was offered by scumbags and scam artists. So what I ended up doing is I would write down the things that I thought were important but didn't know much about. Then I'd do research and learn more, and then write those things that were talked about but I still didn't know. Right? So on and so forth. And I just created this bigger list. So say you're reading something and it's talking about the M2 money supply. Well, what's the M2 money supply, right? Oh, cash held by public, checking deposits, and savings deposits. I get it. Where M1 is only cash held by public and checking deposits. Oh, I see. It's a liquidity issue. Well, what's liquidity? Oh, let me look that up. And I just created this bigger and bigger list, and I don't know. It's an interesting gig. So something's going on here on the pig. And it could be, the bullishness could be over for a while. Especially if it makes a lower high. What would that suggest? Well, either pound weakness or significant dollar strength. And that wouldn't be shocking you, right? What would you guys think? In the next 2 weeks, could we be back down around 155 on the pound dollar? Is it plausible within reason? Yeah. So let's have a plan for that. How many people think in 2 weeks we will be above the monthly R2? Let's say, well, how about touching the R2? 161. How many people think? Okay. Well, the 4-hour pivot point doesn't suggest that. Okay, and that's why we use the moving averages. Now you got to change the time frame and see what the daily thinks. The daily thinks, no way, Jose. Right? So what is this? Let's put it all together. Up for a while. Well, is it going to be 58 or 59-ish? Well, we don't know. Right? We don't know if it's going to be 58 or 59. But the oscillator says up, and it's already been up for a day, right? 55 also says up, but not a higher high. So you really kind of got two choices, right? Look for dollar weakness, dollar strength around 58, or look for dollar strength around 59. Ideally, this is because could be in a downtrend, oscillator about 50%. And once it's lined up there, maybe we follow this oscillator down. Okay? You following me? Jimmy says 60 and then down? Yeah, well, that's not that's definitely possible, right? But that's not what the 4 hours suggests. And how about what does the daily suggest? Up a little bit and then down to the 21. So it says more like 58, 58.50 or 59, and then down to 56 or 57. Because, you know, this is going to move in the future. So how about double top at 59 down to 57? That's not my opinion. That's just what the charts say. Igor says he thinks down to 56 today. Well, it's possible if that 58 is the key, right? Because if we go to look at the hour, we came up, we already hit 58, and then down, 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 down. Daniel, you're on that one too, aren't you? Daniel's on that. Hoo-ha. Well, lovely. Okay. Following the hour, 5A cross down, and so on and so forth. 618 Fibonacci retracement. See, that I got a lot of indicators, right? And they're all nice. Yesterday's low. Yesterday's high. Look at this. This is the 618 Fibonacci retracement. Just from yesterday's low and high, not from the top to the bottom. Just yesterday's high, yesterday's low, 618 Fibonacci retracement, yada, yada, yada. It feels good. Yeah, GDP. Could be a factor. Could be a rabbit, could be. Lawrence, I guess that HD was worth all the money and time, huh? Money well spent. Yeah. Yeah, that GDP could be important. All right. Yeah, so let's take a look at our friend, the USD yen. So that's where we are now. Kind of feels sideways. I guess we got to play the 24. So how do you play at range? Well, first of all, you use your oscillators. You guys doing this on the pig yen? Well, the trend is sideways, Igor. That's the trend. Find support, buy the dip, right? Kind of thing. You see where we are now? We have a nice oscillator cross down. What do? Buy or sell? Good for you guys. Bravo. Absolutely nothing. Very, 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 very good. Very good. Absolutely nothing. Because the most important thing is you're at support and resistance. We're not at support or resistance, so nothing matters, right? Anyone can see. Nothing really matters except some resistance. Yeah. Mama, I just made a trade. Yeah, so that's interesting, isn't it? That's on the 15. Cool. Now you could scalp it off the cycle level or something, right? But a little higher would have been nicer. Igor, the oscillators definitely matter if you're at support and resistance. Did anybody buy that like $200 or $300 book on the 927 different candlestick patterns? The guy claims that he, went to Japan and had it translated, and he brought it to the Western world and unveiled. So now you got to pay him $250 for a book. But do you know who I'm talking about? let me clue you in to this $250 book. Oh, you have one of his courses. Mike! Come on, Mike. Yeah, all right, so Mike could probably confirm this. If you get a reversal pattern at resistance or at support, the market might reverse. Isn't that interesting? If you get a reversal pattern at key levels of support and resistance, the market just might reverse. And if you have a reversal pattern and it's not at support and resistance, the market just might not reverse. Please insert $250 for the next 3 minutes. Please insert $250 for the next 3 minutes of technical analysis. Genius, genius, genius. All right, Nico. Yeah, so that was the only book on technical analysis that I know Borat ever wrote. He's the best at technical analysis in the whole of Wheelage. My sister, she's the technical analyst in the whole of Wheelage. She uses the candlesticks. Yeah, purple dark cloud over there. I like the one, isn't there like a pregnant cat reversal pattern? Gee whiz. Well, Bacon, I'm staying away a bit from the euro because it's so chopped on rumors. And rumors are just not effectively managed through technical analysis. Because they're not trading technical analysis, they're trading, just a blip in the news. So we got to be careful on that one, all right? So I try to kind of back out a little bit on some of these things, okay? Yeah, it's risk is another way of looking at it, right? So no matter how wonderful your technical analysis is, if the finance minister of Greece comes out and says something stupid, you might make a ton of money or you might lose it all. Or let's just say get stopped out, right? And it might have nothing to do with your greatness because you're great. You're a fabulous trader. But whether you make money on it or lose money on it probably has nothing to do with you. It's just where you happen to be in and what direction, right? No deal. Oh, euro weak. Oh, no, there is a deal. Oh, euro strong. And you're like, what the? So anyways, I'm trying to stay away from that for now. Yeah, I like that, the China market crash. Well, see, I don't know. There's too many rumors, and a lot of them are worthless. I don't know where some of these things come from. All right, so let's talk about it. Stock market in China drops 13% last week, right? Well, yeah, they're jacking up margin requirements, and traders that are leveraged 2,000 to 1 are getting stopped. Boom, comes down. But then what happens? The People's Bank of China are going to come in, cut the reserve requirement ratio 2 more times, and slash interest rates, which will then propel the stock market back up. Yeah, see, exactly, Oren. So it came down 13%. So, right? Just think about the basic, guys. It's human nature. The economy and the markets are two different things, and the markets are always thinking ahead. The economy is always measured behind, right? Hey, what happened to GDP last quarter? Who cares what happened last quarter? So it's more like, what's the central bank's response to current market conditions? Right? That's what's important. So if China cuts the RRR, which I predict, and they cut interest rates, which I also predict, the stock market's going to rally up. But this time they're going to do it with less leveraged people. Now, there's still going to be too much leverage and, illiquidity. You understand that point, guys? The illiquidity. I was a currency trader many years ago when the market was absolutely, totally 100% yen short for years. And then one day, the yen gained strength, and the whole house of cards toppled over. And the yen sometimes would move 100 pips a minute. And in one situation, I was short USD yen, made something like 500 or 600 pips in an hour. We hit 115, I remember that point. I clicked out, and 1 minute later, we were at 113. Not 1 minute, maybe 3 minutes later, we were at 113. 200 more pips. And I couldn't get out. I had already hit the close. But there was nobody left to take the other side of my position in the intermarket. There was no one that would take the opposite side. Illiquidity, Forex. Holy smokes, now I'm up like 700 pips in about 10 minutes, and I'm like, get me out, get me out, get me out. And it came all the way back, and I got out right around 115, and I'm like, I was happy to still have my 500 pips. Well, it's kind of like in China right now, where they're borrowing money from banks like it's a mortgage, or they're getting credit cards, and they're like, yeah, maxing out their credit card, throwing it down into a trading account, picking up as much leverage as they could possibly get from their and this is like stocks. This isn't just Forex. In fact, it's probably not Forex at all, right? It's the stock market. Some guy with no money suddenly is holding $25,000 in stock. Guess what happens when he gets out? So you get these big moves. So the People's Bank of China have done things to the market recently, like cracking down on the brokers and raising their margin requirements, which means then they have to raise margin requirements, which then gets many of the participants out. You get a 13% decline in the stock market in a week. But it's not the worst thing ever to happen. But what do you think is going to happen now when the reserve requirement ratio is cut by 1%? RRR is cut by 1%. What does that have? What kind of effect does that have on the M2 money, M1 money supply? Does anybody know? Yeah, but like, can you describe it more than that? It could increase the amount of money in the Chinese economy by, like, I don't know, I'm going to guess 10%, 20%. Boom. Holy crap. So they'll do things to depress the overall stock market by squeezing out a lot of these retail traders, which are the ones that are over-leveraged, and then make better, more favorable conditions for institutional investors. Just like it's been going for, what, 1,000 years, right? The rich get rich and the poor get poor, right? Which is more of a controlled inflation. But that's what'll happen, guys. So, you know, so don't tell me about, oh, well, the Chinese economy is crashing, so that's bad for China. Oh, really? Watch the stock market when they slash RRR, and then come back and talk to me. Because we're not playing yesterday's economy, we're playing next year's economy. Okay? So, whoa, where are we now? CAD? All right, kitty cat. So, once again, you make a decision like Mike's making, and you say you're either a dollar bull or a dollar bear. Okay? So base currency is dollar, currency is CAD. How many Canadian dollars does it take to buy one USD? $1.23, right? 1.23 millions. You guys get it? Do you like that terminology? Based on the quote? Just trying to throw everything at you, man. $1.23. Oscillators is down. Made a little low. Bears want to sell it here. Bulls want to buy it there. And everybody else is a pig. You could be a monkey. That's a kookaburra, right? But there's no room for dolphins in Forex. All right, so enough of that. Obviously, I don't sleep enough. Let's move on from my embarrassing moment. Nobody noticed. All right, so somebody might be playing it that way. Somebody might be playing it that way. Make sure you know who you are. What are you going to do with your trade? I'm going to short. But you wouldn't do it at 123, right? Just want to make sure. By the way, how much is the base currency worth? We're talking about a currency pair. How much is the base currency worth? Can you do the calculation? What's the value of the base currency on this pair? No. That's the cross rate. What's the value of the base currency? No, no, there's a value right here. No, you're just switching and doing a cross rate. $1. Thank you, Law. The base currency is always worth $1. So how many Canadian dollars does it require to buy one US dollar? You see what I mean? $1.23. So the value of the base currency is 1. How about what else could we talk about? How about the bid ask? When you sell, they call it a bid, right? That's the bid and that's the ask. Why is it called the bid if you're selling? Don't you bid things up? You don't, right? That's right. Mike's got it. Good work, Mike. That's what the market's willing to buy it from you, right? If you're the seller, so someone's got to buy it from you, and the highest price anyone's willing to buy it from you is 123.08. So you're the seller, and that's the bid price. That's the current bidding, right? Well, it comes from outdated terminology. So like when I first started trading Forex, there was me. Back then I only had 3 screens. What a loser. Loser. There's me, right? And then over here is the interbanking system. These are the banks, big boys, right? Big boys, banks, right? In all around the world. So did I deal with them? Did I actually deal in the interbanking system? No, I do now. But what happened when I started? No, not the IB. The IB just passes it on to somebody. You're close, Ron, but that GFT is not an IB. GFT was an FCM, but they called it something different back then, and they might even call it something different now. They keep changing the rules, right? So your broker was the middle person, the middle man. So this was your broker here. That's what it used to be, right? And they managed a book. A book of what? When you're talking about the broker's book, what is it? They're orders from their clients like me. So I would place a trade. Let's say I wanted to sell USD CAD. So I placed the order here. But the broker's got like 50,000 clients. What are the chances that someone is doing the opposite of me as far as another client in the broker? Yeah, very high. So that's just offset. And they manage that. So there's other traders, right? They're all over the place. And here's Igor on his laptop. Right, and here's somebody else. And they have dual screens, right? So they're doing all this kind of stuff, and the orders are coming and going, and a lot of the trades offset, right? And they're just kind of hooking us together. But, and this is what I was talking about with illiquidity, what if the yen is worth has an interest rate of 0, and the Kiwi dollar has an interest rate of 8.5. Sorry, yen used to be 0.5, and New Zealand dollar was 8.5. How many people are shorting Kiwi yen? So Igor, generally speaking, yes. Igor says, so we trade against each other. It's called a zero-sum game, most of the time. Well, nobody at that point was shorting Kiwi yen, only long. So where did the orders come from? So the brokers booked then, they were acting as a market maker as well. And if all their clients are long, they're actually short. Right? And this was a million years ago when brokers used to manipulate things and be really bad because sometimes they had to because they had too many orders. It was Wild West when I first, now it's overregulated, anything. So they had this book of all the things they couldn't offset. Okay? And a lot of brokers failed because there wasn't anything, there was nobody on the other side of the trade, and all of a sudden they had, let's say, $1 billion in Kiwi yen short trades because they're offsetting their longs, and the stupid thing keeps going up for obvious reasons.
Financial press.
For 1 minute to the expected minus 0.2% versus the preliminary minus 0.7%. Personal consumption expected 1.9%. GDP price index expected minus 0.1%, and core PC expected plus 0.8%.
This is a 24-hour live broadcast test channel from the Trade the News broadcast network. If you are hearing this message, your sound card and network configurations are working properly, and you are now ready to listen to our other voice channels.
So now, like TradersWay, for example, is an easy yen. They just enter your order straight into the intermarket. So Law is right. So there was a lot of incentive if your broker was the market maker and they were heavy, their book was heavily the wrong way.
Minus 0.2% is in line with expectations. Consumption at 2.1% is 0.2 higher than expected. Price index 0.0% is 0.1 higher than expected. And core PC in line at 0.8%.
As expected, no major reaction in the market. I'm looking at everything now. Pound dollar, euro dollar, dollar index, USD yen, Aussie dollar, USD CAD. I got my eye on everything, and no major response anywhere. Tim, TradeTheNews.com is the fastest news service in the entire planet. That's how fast. Yeah, but I already told you it'd be nothing, right? So we'll see. Maybe there's a delayed reaction, but we're not trading Q1 GDP, are we? Didn't we just say that, right? Q1 GDP. Q1? It's almost July. So anyways, as expected, ho-hum. It should be, right? It's the final GDP. So anyways, yeah, just wondering, you guys find that stuff interesting? I'm happy to cover the, that kind of stuff from time to time. I got a lot of knowledge up, so I'm willing to share. Yeah, all right, cool. So I remember one time a broker in Florida went out of business because all their clients were short yen, which means they had to carry the book, and they were obviously long yen since they were the counterparty. And guess what? They went out of business. Everybody lost their money. The NFA showed up because back then they didn't regulate it, right? Well, they had authority, but they didn't do anything. So anyway, so the NFA shows up to the financial world. I think it was called World something, World. But anyway, so they show up to the headquarters of this brokerage. It was in a dorm room. What? Hey, Paulie. Yeah, it was in a dorm room. Whoops. One world. Does that sound right? But anyways, that was a long time ago. So now the market's over-regulated in the United States of America, and even other places. The laws have changed a lot in the last few years. Yeah, everywhere, in the United States. Okay, now, so that's that. So it did kick off of our sell zone. That's pretty nice, isn't it? And like on the other chart, I'll do this, mark that up. So you can see support and resistance is absolutely key, right? Alex says, good call yesterday. Hey, my pleasure, Alex. Okay. So that's USD CAD. Did we do yen? No, I guess we didn't do yen. And yeah, that's about, oh, I guess we did do it, didn't we? Yeah. Okay, so we already did that. Let's look at some commodities, then we'll do some yens. Oh, did I miss Aussie? Yeah, it's stuck at 77.50 still. There you go. Now you're updated. All right, I'll look into it. Just remind me. Look, it went up to 12 and fell. Really? Keep an eye on 1170. That's probably the bottom. So, according to Strategic and Tactical Forex Trading, published 8 years ago, if M3 is the top, what's the predicted bottom? M1. 1,170 is the predicted bottom for gold for this time period, which is the week. Isn't that nice? Very nice. So that's what I would predict. Actually, that's what the technical analysis suggests. Oil, we're just sitting around doing nothing, and the market's not one way or the other. So I just say we're completely neutral. Right? Just completely neutral. We made it back all the way to this area, and this setup we did last year. Wowzer, huh? Stock market. What do you think? Well, let's drag this over. You never know. It could be important again. Maybe we get a little kick on the oscillator. Not really sure. Seems like it should come down a little bit. 2100. So maybe down to here. If I were to guess. Do we have any relevant pivots? Not really. You zoom in a little bit. Let's go to the hourly. It's been a real quiet week. Nothing really going on. The top isn't anything relevant. The bottom is nothing. You want to hear the S&P 500? No, I guess that's not for another hour, right? We listened yesterday. I did a 2-hour webinar yesterday. And we looked at the stock market open about, 5 minutes after the open, and it was already quiet. You can see that reflected here. So this is that USD CAD again. This analysis goes back. We've been doing this a long time. We started this in the beginning of the year, and it's just following the support and resistance quite well. I was hoping it was going to stay above the green. It didn't. It came back down, hit this area, and maybe just heads back up above the green. Still lots of upside for the USD CAD potentially, according to the oscillator. But again, might not be the most important thing at that time. Let's go through the end. I'll do it again, scan. Okay, we'll start with CAD yen. Where, oh, where has my support gone? Oh, where can it be? Looks like you missed the short. I owned buying off the hourly 21 would be a bullish move. But if you consider this a range, then the moving averages are moot. If you go a little higher, you see it's a pivot cluster of weekly and monthly pivot points. The monthly M4, which is right here, is the predicted top for the month of June. So somebody might be taking this down to the bottom of the range, which would be the play if you're trading the range. That would produce some CAD weakness, which would also move that USD CAD up. So, is it the target now M2? No. No, not necessarily. Okay. What'll happen is we need new pivots in July. If you were to guess even further, you could say if M3 is the bottom instead of M2, and you were bullish, then R2 would be your target. So a bull, an extremely bullish bull, would want something like this. I don't think you'd even get it that clean either, because I think a lot of people are not that certain. So you would get like, we had this, then down, then test this extreme area here, down, confirmation, then up. That would be next week, right? Because we're getting close to the end of the month. So there's your kitty cat yen. Kiwi, we're still at our bottom. This is a potential buy zone. Pretty high risk. So make sure you want to do it. The charts tell me that this is possible. Right, in which I might look for that. Hua! Hurrah! I know that one's kind of a muddy chart. What are you going to do about it, huh? Pound yen, sideways. Don't worry about it. Euro yen. Move this out to the 4 hour. And I had this level of support back in here. Our guess was that. We got about 2/3 of the way there and it wimped out. You could see the thought process last week, don't you think? M2, M4. That was the plan. M2 to M4. Well, we only got here, the weekly R1. So clear as mud. So what you probably want to do now is play the range and go from an uptrend to a S1, R1. In fact, we've already done that. So one of the things you'll see in my book, it's trending up. The range is M2 to M4. Change colors because you might not be able to see that very well. In a downtrend, it's M3 to M1. Sideways market, it's S1 to R1. Okay? This one kicks off the central, so you'd probably go for the R2. This is supposed to come down a lot more, but it didn't. Therefore, this week, kind of get this kind of stuff. So right now, our top is weekly R1, and our bottom is weekly S1. It's not really suggesting down from here. But the oscillator says, if you want to buy it, you could buy it off support, which is this dip here, weekly S1, monthly R1, maybe even wait for the 200 to catch up. But other than that, we're just range trading. I wouldn't expect anything more than that. And I guess we'll finish up on the Aussie. What do you think? Easy money? Does that look like the fish are jumping in the canoe? Does that look like the easy money? Then stay away. Let me make another point. I'm sure you know, but let's look at it again. Does that look like easy money? The pips are just going to jump in the canoe? No moving averages, pivot points being ignored. Does that look like easy money? Then stay away. And that's our strategy session for today. Hope that's helpful. In very short order, and then let's say I'm usually done 45 minutes from now, half an hour from now uploading the video. So within about 90 minutes, the video will be posted for your review. If you want to go back and see something that I did, it's going to be right here on the home page. Okay? It'll also be available on the right-hand side. And then, of course, stuff that I heard before will also be here. By the way, did you attend the Federal Open Market Committee meeting interest rate decision release? You guys, I did it was all completely unscripted, and someone was ringing my front doorbell, my phone's ringing, and the market's moving, and I got Trade the News yelling in my ear, and 100 people logged into the room, and I'm trying to explain the history of the Fed, the design of the Federal Open Market Committee, and so on and so forth while all that's going on. So it was kind of choppy, and I had to end very quickly. But a lot of people said it was good. So I put that up there for you, the Beginner Forex Trader's Guide to the FOMC. That's also right there on Forex Today. By the way, I want to give a shout out to YJ. YJ, are you in the room? Look at YJ's post today in the Asian session. Actually, this is just before the London Open. Good job, YJ. It's very clear, very easy to read. Also, I've been enjoying your Ikimoku Muchu Kuchu cloud stuff. Yeah, please keep that up. Ikimoku Muchu Chuchu. Ikimoku Muchu Chuchu. There's so much stuff. Yesterday's post is already on the other page. YJ, that's not it. Where's your one on the cloud, man? There's so many posts. Anyways, trust me. Oh, you know what we can do? I'll show you this. If you like YJ stuff or any of the other analysts that are posting, right now there's 6 people posting their analysis. If you like a particular analyst, like YJ, you can go to their personal blog. So we can do it this way. Just click on their name. And Ikimoku Study gives you another very interesting point of view. How nice is that? So thank you very much, YJ. 1, 2, you rock. Keep that up, and I enjoy reading them. Yeah, only 3 or 4 charts. That's it. Very good analysis. So anyways, guys, peace on earth. May the pips be with you. May our profits be above average. Thank you for being on my team every day. You keep me focused. You keep me sharp. I got to bring my A game every day. I'll be honest with you. I wasn't feeling that good today. I was going to like wimp out. I was going to take the whole morning off since I've been up since 1:30 a.m. And I thought, you know what? I should just call in sick. Honestly, I thought about that. I should just call in sick. I should skip the New York session. I should just take a break. I work too hard. Me. Wah, 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 wah. Then I said, you know what? I can't do that. I got responsibilities. Yeah, I usually don't make it a sick day, and if I do, it'd be once a year, but that's not every year. So anyways, that's what responsibility does, guys, and I take our relationship and your loyalty that seriously. On days when I just want to pack it in and call it quits and just take the easy road, I don't. And now I'm still here. I'm still focused. I'm still sharp. I've reviewed all the charts with you. I got some ideas. I got some trade plans, and I'm reinterested. I've got back in, So I appreciate that. Oh, and then one other thing, registering for webinars. There's a lot of me here, but the plan is in a few months that there will be other people giving webinars as well. At least that's the plan. You'll be able to register for those as well. So anyways, got to jump, babe. It's been real. See you tomorrow.